Well, now let's take a look at the property market. This is our Spend with TMS segment. Of course, during the lockdown, the property deals were quite limited owing to the fact that people could not go out there, look at the property themselves and decide on whether they'd like to purchase it or not. During unlock as well, physical visits are to the bare minimum. In fact, they are not even recommended, but that has not stopped deals. There have been a couple of deals that have happened. What's the pricing been like? What's the demand been like? Which areas have actually seen the most amount of demand? And I would like to squeeze in a question on rental yields as well. To talk about this and more, I have with me Sandeep Reddy, the co-founder of PropStack. They've done some very interesting analysis on the deals done specifically in the MMR region or the Mumbai metropolitan region since the unlock, that's roughly since mid-May. Sandeep, thank you so much for joining us today on The Money Show. I hope you and your team at PropStack are doing well. Let's start off first by talking about pricing, because Mumbai is notorious for having very high property prices, especially in central Mumbai and western Mumbai. What has pricing been like? Largely, have you seen a decline in pricing over the last, let's say, 1 year during this unlock period?
Thanks a lot. Thanks a lot for hosting us and giving us an opportunity to talk about our findings. Basis the property registration data that we track for a lot of primary projects. When I say primary, new projects across MMR, and MMR is we can divide it into South, Central, Western, Eastern, Thane, and beyond Thane. Our findings, typically we've seen that pricing has been mostly on a downward trend over the last few years, given the slowdown in the sector. But given the whole COVID situation and the lockdown situation, I think the sector is facing a lot of, everyone wants to know what's going to happen given this whole pandemic. And post the lockdown, registration activity has started to pick up, though it's nowhere close to what it was pre-COVID. I think it is close to 70. Registration activity is down 70% from a pre-COVID levels. And what we've seen is that early trends, and because just registration started, say around 18th of May, and in the last 45 days, we've seen registration data.
Okay, I think we're facing some technical problems with Sandeep's link, maybe owing to the rains and the perils of lifestyle. Okay, we've managed to reconnect with Sandeep. Sandeep, continue making your point.
Yeah, sorry for that. So we've seen that registration has started to pick up. However, it's interesting to know that most of these registrations that are happening now are bookings done by consumers or buyers, say in the pre-COVID period in Feb or March, and they're just given a token amount and are registering now because they've already logged in their bookings. However, we see, and this is not data, but this is anecdotal evidence that we are seeing a lot of buyers also, even after giving a booking amount, trying to renegotiate with developers given the pandemic, and it is having a negative impact on a lot of consumers, right? People are maybe salary cuts, maybe job losses, so people are trying to renegotiate, and that's why we've seen that comparing it to pre-COVID rates, we are seeing a 5 to 10% decline in prices in the early registrations that have picked up. So that's what we've seen on the pricing front.
So even compared to the pre-COVID era, that means we're talking just in Jan and Feb, maybe not even March, let's say, there has already been a dip in pricing. I just want to also understand, Sandeep, is this dip in pricing also because real estate developers and sellers just want to get rid of the inventory that they have with them, and hence are willing to give any kind of discounts and schemes and offers to the buyer just so that they can get that cash in their hand? Do you think it's prompted because of that as well?
So to be honest, we do not right now see any aggressive marketing campaigns by developers trying to sell at whatever price they get, right? These are negotiations on the table wherein there's an interest, and then given that the developers also need cash flows, they are negotiating. However, what we've seen that most developers right now are marketing offers which are largely giving uh, uh, payment structures where you don't have to pay anything for the next 12 months or 18 months, right? So those are the schemes that developers are right now promoting to tide through this pandemic, right? So they are telling the customer, we understand that there's a pandemic, and just to manage your cash flows as well, you just pay 10% today, and the remaining payment you can pay after 12 months or 18 months. Hopefully by then the pandemic, the negative impact of the pandemic would be much lower. That is what we are seeing right now from a marketing campaign and how developers are promoting. But as I said, now if you get down onto the table and discuss, you will get better pricing, given that every developer is also in need of cash flows. They have to take care, they have to build, they have to also repay loans. So that's what we are seeing right now.
Well, yeah, if you have cash in your hand, I'm sure every realty developer will be ready to give you, the deal that you would ask for at this juncture. Is this then, Sandeep, a time you recommend individuals buy property? We are facing two dilemmas here. Firstly, maybe this cash crunch, if you could call it that. In that case, maybe not. But if in case you do have the cash and you're looking for, places to invest, real estate could be considered as, one of the safer bets, right? However, the other problem is that if my intention is to put it in real estate for investment purposes, if I put it out on rent, the rental yields are extremely low, especially in a city like Mumbai. Maybe it's a little better in, in other parts of India, but especially in a city like Mumbai, rental yields are extremely low. So what would then you recommend those individuals who may be scouting for real estate as an investment opportunity? And I'm sure you'd recommend that for those people who are looking for real estate for themselves to live in, there is no better time than now.
So absolutely bang on, right? So two things, right? If you are an end user, if you want to stay in your own house, this is absolutely one of the best times, because when there is fear, you should capitalize, but most people are unable to capitalize on such situations, right? So absolutely the best time, and I would recommend that consumers should look at ready to move in projects. There is enough supply of ready to move in with OC, so that there is absolutely no risk of completion. So I would definitely recommend that from an end use perspective. Now coming to the investor use case, right? We've seen that investors as such, have post demonetization, and since then we've seen investor interest erode in the sector slowly and steadily, right? Because there are no price increases, and as you said, rental yields is something that is not lucrative enough in the residential sector. It is anywhere between 2 to 2.5 or 3% max, right? What we've seen is, that's why we've seen investor interest largely in commercial real estate, where the yields are much higher, between 8 to 9%, right? So we've seen a lot of pre-COVID, we saw a lot of interest in commercial real estate because of the yields. But in residential, it was largely a capital appreciation play, which has been subdued for the last 3-4 years, and investor interest has eroded. So I don't think investor interest is going to come back heavily. However, if there are distressed deals where the deals are at 25-30% discount, and the developer is dying for cash flows, that is where investors would come in, because they know that if they wait out for a period of 1-2 years, markets will become better and they will make their returns. Not a rental yield play in residential at all.
All right. Okay. Well, on that note, Sandeep, thanks so much for joining us. Yes, absolutely. Commercial real estate still gives you better yields than residential real estate. But yes, thanks so much, Sandeep, for joining us today and just, sharing some very interesting aspects of that, of your findings and your studies.